80% of homeowners have a rate of 5% or less. And so the biggest objection and question in people's minds right now is like, why would I trade in my low rate for a higher rate? Or, why change properties when I can hold on to that lower mortgage payment? Well, here's the thing. In this market, it's not right for everybody to go and buy a home and upgrade their, increase their mortgage or increase their rate. And it doesn't necessarily feel good to increase your rate and tell your friends about it. But at the same time, contingencies are back. And there's other things going on that make it easier to buy a home right now, or gives you more options to buy a home, I should say. So contingencies are back. What does that mean? Well, you could actually list your property and go and buy a new home and make that new home contingent on the sale of your property. Well, in 21 and 22, that was not an option. You either had to have cash or you had to have a very strong loan to win multiple offers. Well, right now, somebody that is selling their home and you're looking to buy it, they might be willing to accept a contingency. And so as a buyer, that is an advantage to you and an option to you that makes buying and selling at the same time a lot less stressful, and you can hunt for the property that you really want for a little while, and it just gives you another options. So another thing is seller credits are common right now because sellers know that buyers are pinched a little bit and that they might have to negotiate some kind of credit to allow that buyer to buy down their rate or pay for moving costs or closing costs to keep some cash in their pocket. Assumptions are actually up. So if that seller has an FHA or a VA loan that is assumable, then you might be able to assume that person's lower interest rate, and that might be attractive to you. Most people that have been in their house prior to 2021 have 30 to 60% equity. They may just be sitting on a big, huge pile of cash. And so if you're downsizing or if you want to move to a new home, you might be able to sell your house and pay cash for the other one and not have a mortgage at all. So there's some options out there as a buyer that are opening up because of these higher rates that allow you some flexibility. And I don't think a lot of people are thinking about that. I think the number one thing they're thinking about is, I have a 2.75 or a 3 or a 4% mortgage. Why would I go and get one for 6 or 7 right now and have a higher note that I may or may not be able to afford? Well, if you're in that category, then yeah, stay where you are. If you really love your home, stay where you are. If you